expectations for a relatively strong jobs report tomorrow, rallying the dollar today. The currency now topping $1.30 to the euro, reaching its highest level in 1 month. But our next guest is not impressed. Axel Merk is the president and chief investment officer of Merk Investments, which manages 3 currency funds, all outperforming their peers for the past year. He favors the euro over the dollar and is a long-term investor in gold. So not on the gold, Axel, but at least on your euro position, you're a contrarian, and yet you outperform. Do you expect the euro to continue to strengthen? I mean, you did say about 4 months ago that it would, and it has since then.
Well, by all means, everybody hates the euro, which means there's a lot of bad news priced in here. The other currencies, like the Australian dollar that everybody loves, we like it too. But when everybody loves something, that gets a little pricey. What you see with the euro is that the situation is worse than 9 months ago, yet the euro is much stronger. And what's happening is that, rightfully so, people are pricing in all these problems into the bonds, into the bond spreads, and not as much into the currency anymore. The euro is sold as a proxy because the bond market isn't as liquid in the eurozone, but in the end, these problems are the problems of these particular countries, not the eurozone as a whole. Think about what needs to happen. What we need to do is we need to get more control over the budgets of these countries. It doesn't matter whether the IMF does that or Germany imposes those terms, but that process is in motion. Portugal, Ireland, Greece, all these countries are losing control over the budgets, and that's a good thing. They're getting their house in order. Not happening as fast as some people would like, but it's a process that's underway.
Axel, as we said, you're a contrarian. Like many out there are those that think the euro is going to be under a lot more pressure. We talked to John Taylor of FX Concepts yesterday. Here's what he had to say. All right, we don't have it, but what he basically said, John Taylor said that the euro is going to go to par, maybe even below it. He says it depends on how Europe really manages this crisis, and he said they're nowhere finished. And Axel, I kind of buy his argument. I don't think we're anywhere close to dealing with the situation in Europe, and a lot of folks say we're not even close. Where do you get your optimism from?
I agree that we're nowhere close, but let's take the other side of that coin. Ben Bernanke, head of the Federal Reserve, has said repeatedly, going off the gold standard during the Great Depression has helped the U.S. recover from the Great Depression faster. When you debase the currency, as the U.S. is trying to do, you're going to feel better, have more top-line economic growth. When you're on the other side of that coin, as you're on the eurozone, you're not printing and spending as much money. Remember, the eurozone has mopped up hundreds of billions in liquidity last year. You're going to have a lot of pain. You're going to maybe have less economic growth, but it's possible to have that on the backdrop of a strong currency. It's a misnomer to think that you need to have economic growth to have a currency. That applies in the U.S., where you have a current account deficit. But look at Japan, has had a lousy economy for 20 years, yet you've had a strong currency. The eurozone can do quite well despite all of that, simply because they're not sprinkling money over these problems, but they're trying to actually fix the underlying problems.
I wonder, are there make-or-break decisions that European leaders, and I'm thinking of Angela Merkel, have to make going forward that you're watching out for? I mean, are there milestones that need to be hit the right way?
Well, think about the healthcare debate in the U.S. It's a very ugly sausage-making process, and it's playing out on the public field. Germany, of course, wants to impose terms on any help that they're getting, and of course the weaker countries would just like to get free money. Ultimately, the spreads will again narrow. We just hope that the German spreads are not, bond prices are not going to approach the Greek ones. The reason why we're more optimistic is because, forget about Portugal. That's a small country, and it's unfortunately quite hopeless what's going to happen there. But think about Spain. Spain is in a very similar situation as Finland was in the early 90s. The Soviet Union collapsed, their housing market collapsed, their banking system imploded, but Finland now has the lowest credit default swaps in the eurozone, even in Europe, with the exception of Norway. And the reason is that they had a very low debt to GDP ratio, and despite having high unemployment, they are able to address their issues. Spain is in the same situation. Unlike Greece, Spain has a real economy, and they're addressing the underlying problems. Of course, they won't do so perfectly. Of course, it will take a long time to rebuild the trust, but a lot of hatred is priced into the euro. And so if you take that into context, we do believe that the euro is a lot of more value than many other currencies where eternal growth is going to be priced in.
All right, so you like the euro over the dollar. Again, we said it was a contrarian play, but what about, again, going back to John Taylor yesterday, Axel, because we just talked to him. He thinks the dollar is going to do better after March. He thinks there's going to be policy changes in Washington. There's going to be a slowdown in spending. spending. He thinks the Fed's going to be really under the gun here. He likes the dollar. You don't buy any of that.
Forget about the change in Congress. We're going to see more bickering. We're going to have a tiny less discretionary spending, but we are not going to address the entitlement reforms. For the time being, we're happy because we've sprinkled enough money onto the system, but the housing market is by no means cured. We need to have a higher price level, and that's what Bernanke is working off to bail out those homeowners. Okay. That's the mindset in the U.S., and so structural reform is not going to happen in the U.S. So for the time being, in the short term, we feel better, but not in the long term.
We got to run. Axel, as always, good to get some time. Axel Merk, President of Merk Investments.